Welcome, traders. So it is suddenly I'm blanking, Friday the 8th of December, and it's post NFP. I wanted to record this today. I've got a lot of things I have to do this weekend, so probably for the foreseeable future, wherever possible, I'll record these on a Friday. Now, let's kick off immediately with the economic calendar. Again, amazingly, jobs numbers out of the US, they can be revised, it's possible, but jobs numbers out of the US for non-farm payroll. And for traders who are new to this is the most significant, consistent monthly event that creates the most volatility in the markets. The US is the world's largest economy by far. And so we pay attention to their jobs numbers because that can be an indication of stability of the economy. Now, today, another record one in terms of why is it a record? I don't think in the history of the US before have they ever had such a solid performance with regards to jobs and wage growth, inflation coming under control, and employment. So it's interesting. I mean, there are a couple of people that are working a couple of jobs here and there, but the average wage has increased. It's increasing faster than inflation in the US. So right now, the US has the healthiest economy in the world compared to the G8 as well. So it's significant, respectable is my point. I want to just highlight something here. So the average hourly earnings have increased from 0.3% to 0.4%. Non-farm employment change 199, which beats expectations, okay, beat the forecast numbers. And the unemployment rate was at 3.7. It's actually gone down. Unemployment's actually gone down again. The reason I'm mentioning this now is because it's had months and months and months of these kinds of good news coming out. And it's just rare for an economy to almost consistently surprise and just keep performing. And so I think the current US administration should get acknowledgement for this. This is actually, I don't think it's ever been achieved before in history. It's really good. They are slowly reducing the deficit. Obviously, debts are a real problem that has to be reduced. One of the ways in which we want to do that, obviously, is you need to be taxing. You need to make sure that the 1% pay a fair share, proportionate share of taxes, rather than less taxes than the 99%. They need to be paying a proportionate amount. Goes a big way to reducing debt. That tax money can then go towards that. And it's interesting. They've actually seen Inland Revenue Service have actually increased the money they've been getting in because of getting people who've been dodging taxes, paying taxes in the past to pay taxes. So anyway, the point is, those are really good indicators. Don't take that from me. Take it from Ray Dalio. Bridgewater Associates, very famous investor, very famous, and he'll explain to you if you go through his books and stuff how economies benefit from making sure that you have a strong middle class and you're making sure that taxes aren't being, the burden of paying taxes, which supports the country, isn't sitting on the 99%. It's got to be, everybody's got to pay their fair share. Okay, and so really in unemployment, this looks really good. And actually at this point in time, let's go ahead and have a look at how the markets respond to that. Before I do that though, we need to talk about the huge amount of news coming out next week. So it's relatively small, and I apologize if you can't see it, but it's not really that important. The most important features will be on Wednesday, which is the federal funds rate. So this is FOMC. They're going to be really talking about whether they want, what their FOMC statement is, what their outlook is. My personal instinct on this is that this is an old-fashioned administration. In 2012, 2017, it was normal for us to have higher interest rates. And my belief is that reducing those interest rates triggered the global financial crisis because lending became too easy and people got exposed to too much debt. So when the interest rates are higher, people actually spend less, which is a potential danger, but also they don't expose themselves financially, and actually nobody else does that as well. So a big part of the world today with all the debt we have is that in order to reduce that, it's like credit card debt, you've got to be spending less each month going forwards, and you ideally have to be paying off that debt. Obviously, the goal is that you're earning more at your job as well. So all those things are, in theory, in play. And so this is something I believe that they're going to be almost super reluctant to reduce or to drop they might drop it a little, but I believe they're going to hold where they are for as long as possible, which could be a year or two. A lot of people are just expecting them to immediately start to reduce it to stimulate the economy. There's no reason to stimulate the economy right now. Economies are doing fine. Everybody's surviving at this point in time. They might drop it a little, but only if they absolutely need to do that. There's just no need to do that. And of course, one of the biggest reasons to do it is to cool any overheating economies. So for example, if there's a property bubble occurring somewhere, for example, in the US, or there's a vehicle or spending bubble occurring in some areas, this is one of the best ways to do it. It curbs luxury spending. It's a very good way to do it. Buying a house is not luxury spending. It's a necessity. Everybody should be able to do that. One of the best ways to bring property prices down is to be able to make it more difficult for people to, this is careful because I feel like I'm stepping on a landmine here, for people to borrow. But the goal is not for people to borrow, but for people to be able to borrow more than they can afford. And then what that does is it cools people buying houses, which obviously is part of what fuels it, and it brings it down. And this is coming straight from personal experience, and most people who've lived through the global financial crisis, we know how those property bubbles formed. And the fact of the matter was that it was just a supply versus demand. And in order for you to bring those prices down, you need to cool demand. But it's a catch-22 because everybody should be entitled to buy their own home, and they should be able to afford it, is really what the purpose of this is. And as long as people keep borrowing at existing rates, the property price will keep going up. So there's kind of a tricky way to bring it down, unfortunately. So I just kind of, that's a big topic, and I'm with everyone on that. Everybody should be entitled to do that. So that's just one of the tricky things. Next thing up here is the monetary policy stuff, which will also be the rate stuff coming from the Bank of England, or at least from the official bank rate votes in the UK, and then of course Euro as well, doing their monetary policy statement. Those are the things I would really be focusing on. After that, I don't expect any real shocks from anywhere. There's PMI data coming out of Europe, the UK, the US as well, and CPI data. For the most part, there shouldn't be any big surprises there. So I don't think they'll necessarily change too much of the, impact the economy or change the sentiment at this time. In fact, although I normally talk about America, I think now is a really good time to start looking at the UK to see what the UK is going to be doing in terms of that. Right now, I'm not as concerned about the US economy because it impacts all of us. Now it looks like it's doing fine. So now I would like to be focusing on the UK economy to see how that's going to be doing it. Okay. All right, so having a look at the VIX. The VIX itself is still at relatively low levels, again, meaning economy generally stable, if nothing else, just looking like it is. My chart is delayed, so this won't really display the dollar index. So let's just go straight across and have a look at euro dollar. Euro dollar, you can kind of see where it is. It looks as though it's potentially holding above support, so I'm just going to put a bit of a level in there at 107.64. Looks like it's potentially doing that. If we look at it from a weekly perspective, we were just doing a simple retracement, and we're still range bound. Because we are still range bound with euro dollar, it's not completely ridiculous that we might be able to work our way up to the top of the range, unless we want to include the high of last month as the top of that range. We might find our way coming back down, but otherwise I would see if we can potentially move and tap 1.1 really actually does make a lot of sense as that high. So what was the high of this one? The high of that was not, it was 1.1. Okay, we tapped it. So we're still range bound, which just means unexpected volatility in the markets could sort of go any which way, and therefore it actually makes sense to just not necessarily have an expectation for the week ahead when it isn't offering much clarity, but to be prepared that it could go either way, to monitor what it's going to do. For example, on the data here, is it going to break below the low of today or Friday, or is it going to break below above the high of Thursday? And then that gives you a miniature range, which then will tell you how the rest of the week is likely to go. Okay, sterling. Again, also trying to sort of stay above this level. I would say there's still some potential here for sterling to retrace further down within this move to the upside, and it has that potential to head down to 1.2450. That is a possibility there, so I'd be prepared for that. You can see this is range bound as well the last couple of days, and also within this move, it has come back down. Again, it could still come back a little bit further down to 0.65 or 0.600 for Aussie dollar against the US dollar. So there's still some potential there to get a stronger dollar in the coming weeks, and I'm going to explain why when we have a look at some of the other asset classes. I still feel, again, Kiwi dollar could do a deeper retracement. It's not unusual for currencies to do a 382 or 50% retracement. It's really not, even within a strong trend. And so that would mean potentially here that if we have indeed started that retracement, we're actually going to see a stronger dollar next week. I'm going to see it continue to move back down, or see the majors continue to weaken against US dollar. We'll know more about that when we have a look at, say, gold, or we have a look at the indices and see what they are. And by the way, I'm also wearing a t-shirt as well, custom t-shirt that I've had made, which is keep calm and carry on trading. So if you do like them, I'm gonna be getting all the gear. I've also got nice little stuff here. I really like these things, and I want to start creating gear for traders. That's really cool. Anyway, so if you do like them, I think somewhere on my page or somewhere as a shop, you can order these at the colors you like as well. Okay, so let's just go and have a look at dollar yen. And if you have ideas for that, also let me know, and I'll see if there's any type of custom gear that can get made. So have a look here. Dollar yen finally sort of caved at this level here and got pushed back. This will make BOJ very happy, in my opinion. However, they're not out of the woods yet. We could ultimately still produce a stronger, a higher low here. So we could see if December produces a bullish candle, then attempts to do a bit of a breakout. So this area is one to watch. And so for me, that really just means observing this and playing it as it lies. There's definitely going to be buyers below here. They're going to push dollar yen up, and at the same time, there is still the potential for it to continue to head lower. I think I think that it makes sense to me that it should still do that, but I'm prepared for it to go either way. Then dollar Swissy, so dollar Swissy within its downtrend right now actually looks quite interesting. I've kind of been off on dollar Swissy recently. Usually I'm relatively decent with my analysis of it, but it kind of is sort of doing its own thing, and dollar yen does its own thing. So, excuse me, here I think it's important to see how we close for December if we're bullish, whether this is also stuck within its range and whether that range holds, excuse me. So let's go and have a look. So let's just say that I define this as the range, which I think actually I'm more inclined to say that it's up here. So then we would have to see if it stays within its range. So dollar Swiss is a little bit harder to predict. It's currently in a downtrend, and that downtrend could very much bring it back down to this level, which doesn't support a stronger dollar. So we're getting some mixed signals there. So in fact, I'm actually more inclined to think that if we break the high of this bullish candle, then we're likely to see it head up to 89.30, which actually makes a little bit more sense within all the other stuff that I've been talking about. Dollar CAD. All right, so again, dollar CAD's in a downtrend, also looking like it wants to be quite bearish here, also may want to head lower. So I think the safest way to navigate dollar Swissy and dollar CAD is to mark the high and the low of this weekly candle. I know it's the week that's closing now, and next week look to see if we break the high or the low of that. And if we break the high and the low, high or the low of that dollar Swissy and dollar CAD weekly candles, and they're both, let's just say for example, we break the high of both dollar CAD, dollar Swissy, that gives us a good clue as to where the dollar is going as well. Let's move on and have a look at gold. So gold got its nose booped, it got smacked at this level, but very cool in the sense that it was almost bang on that 2150 level. I'm going to mark 2150. That's really where I see that big thing. It was a pretty nice reaction. It's a relatively strong candle, but we still have, we've got 2 weeks left of the month. So overall, I think this looks nice and strong. I think it's got a good chance at recovering. So what I'm going to be looking for this week is to see if it could find support at that 2000 level, or if it still needs to go lower down. Now, a while ago, for the last few weeks, I was talking about how gold needed to connect with 1940, and it finally did it. In fact, this was a ridiculously obvious setup in hindsight. If you go back and just have a look at the videos, kind of coming back to 1940, then selecting it. And the funniest thing is I didn't take that setup. I look at it now and it's an obvious setup. I was waiting for 3 weeks for gold to hit 1940. It came down, tapped it, produced a bullish candle off the level on support at a fib level. Like, it's a no-brainer, and I missed that setup. It was just such a ridiculous trade setup. So it happens sometimes. Irony is, even when I'm reporting to you what I'm going to be looking for, sometimes I still miss stuff. Like non-trading stuff can interfere with your thinking, I guess. So yes, there's still a possibility it'll come back down towards 2000. I'd be surprised if it came down to 1940 again. I'd be very surprised by that. I think we're looking at more like a 1950, 1970 at most, before I think it attempts to recover and then works its way back up to the top. So often when a market goes to an all-time high, there are sellers that are waiting. So first of all, there are buyers that are in that move that are then decide to take profit because they're nervous, and both sides know the other side exists. And sellers are often waiting for it to hit an all-time high or an old historic high, for example, and they're looking to sell. Statistically, it makes a lot of sense. Eventually, that line will get broken potentially, but usually 1 or 2 times you can sell at that level, and that's kind of what's happened here. But it was a much more, it's a brand new high, historic high on gold, and therefore I think I need to keep in mind that there's a very fair possibility that it could hold at this level, recover, and then start working its way through. So it's going to be interesting if here we are in 2023 December, and then by January 2024, we've got gold at all-time highs. Something just to muse about, to think about whether that could be something that happens. But this is a very strong bearish candle, and how the week closes, which it looks like it's going to close this way, usually implies a move down. So based off this, I'd say it's going to come back down to 1940, based off that price action. But when I look at the daily, it might hold at this level or possibly a little bit further down. When I look at the monthly, we still have plenty of room to go. But this is a very, very bearish close. So I'd like to see how it closes tonight. If it does close higher and it takes a little bit of that, or if it closes right near the lows, it's going to follow through on that momentum. If it manages to push back by the end of the day, then we're probably going to recover. So that's something to watch next week. Silver, you could see within its range, bit of a knock down. So again, there's still that potential for it to go back down, maybe another week down, and then recover, and then start going back up from that point onwards. Natural gas. Why is my natural gas in the wrong place here? What's going on here? There we go. Natural gas continues to just trend lower. So this one, where for ages going all the way back into March and April, this thing is just going to keep continuing low. So there's just no demand for it. And it's interesting because we're heading into winter as well. So there we go. Crude. Okay, so crude oil. Let's have a look as well. Let me just check something quickly. Okay, so this is light crude, and you can see light crude has started that retracement back up into these moving averages. For now, there's no real bullish divergence, so it's leaning more bearishly, which means it's not unreasonable that we could expect this to continue to head lower for now. Okay, so I'm just going to add that to my watch list. We'll do that for the week ahead, and I'll stick that down at the bottom, and then I can just check it every now and again. Right, let's move on and have a look at the MVPs, see how they're doing. So minor, very reluctant retracement, so let's just adjust that up to there. Very reluctant. As far as I'm concerned, they needed to be doing a much deeper retracement. And this is why what I want to do is to see how this ultimately closes. If this closes with a bit of bearishness, that could be our swing high, forming if we break the low of that. So this weekly candle to me is very important to watch a break of the low that in the coming week would indicate a bit of a retracement. We do need to have it. We are sitting at all-time highs. You know, again, there's some ridiculous stuff in the media. We're now double topping. This is what their argument is, that we're forming a double top on these things, and therefore we're likely to continue to move down. There's a lot of really, really bad reporting in the media, guys. It's never been this bad before. It seems as though the media has become obsessed with picking at its sores and wounds, and it just wants to just obsess about how bad things are going to be. And so I just see headlines coming about, okay, well, fine, we didn't have a recession this year, but we are going to have it, so it's going to happen next year. And I'm going, well, eventually, at some point in our future, we are going to have a recession again, obviously. But we had one throughout 2022, which is where that massive correction was. And 2023, actually, when you start to look at the markets, has been mostly a recovery. We just haven't gone on to new highs yet. But we can't do that. Pessimists, actually, it's the optimists who make the money. That's really how it goes. The pessimists like to get to claim that they're right. But really what we do here is we follow the market. And right now, the data is looking good, and the market is showing that it's increasingly bullish. So despite what we're hearing in the media, the actual transactions going through into the markets are matching the data. So the market's behavior is matching the numbers that are coming out. The only thing that isn't adding up is the media's shockingly bad reporting of it. Okay, so just highlighting that. Okay, so let's have a look at some of the other stuff here. The S&P, again, look, you got what's often referred to as a little bit of a hanging man type of behavior here. It is sitting at a key level. We do need a retracement, but it doesn't have to be a bad one. Like for me, for example, I would love to just see this sort of come back down to a level over here, which would touch a nice fib level and then continue up. And then it's a nice, healthy retracement. So we'll see if that's going to be the case. It only really matters if we start to break through these levels here. We could continue to push higher. So again, my approach here is going to be watching the highs and lows of these weekly candles. Possibly one way that could happen is it attempts to go high next week, closes as a rejection, and then the following week we get it. And that could very well happen just while we're on holiday over the Christmas holidays. But yeah, in principle, guys, this is that period when, you know, we should be looking to, we should be optimistic. We should be optimistic. The data's there, it's all there. So look at this behavior here on the NASDAQ. This is a kind of a key level to watch there. It's 16,025 if you really want to nitpick on it. We're sitting slightly above it, but we are failing in this area. Now, where did we see this before? If you're new to my videos, you'd have to go back and have a look at the archive. But if you watch all my videos, you know that I talk about this type of behavior a lot. We had similar stuff like this on NVIDIA, for example. It just didn't want to quit, and eventually it did, and then it just fell down. So we've got a similar type of behavior here, and I'm looking for this to be the case. We're not free of these highs here yet until we get a candle that closes way above that, far above that, then we're free and clear of it. But this is not a good sign. It's a sign of exhaustion, and therefore there's only two ways to get past that. You either go sideways until you eventually have taken a bit of a breather, which means you'd have to go sideways for a couple more weeks at a minimum, and then we can continue up, or we have a correction. And the correction is just such a much better way for the market to come back down to produce a nice bullish candle here at 15,500 and allow us to get in. So it either leads to a breakout or a pullback. That's where we're at now. Russell 2000, overall is looking good. Look, it's going back up to the top of its range here. It looks very nice and healthy. Let's have a look at the FTSE. So the FTSE again is also looking relatively nice and healthy. It's got a little bit of a kind of a lid that it's trying to break past, which is this 7,500. For the most part, it doesn't look terrible. I'd like to see that move on. DAX is on fire. Okay, all-time, well, is that all-time highs? That looks like all-time highs to me. Looks very, very good. Okay, again, I'd love to see just a bit of a retracement, but this one looks very healthy. It just continues to go up hardly. I mean, there was one tiny, tiny, tiny little pullback, and it went. Didn't even touch the moving averages. So again, I'd be looking for something like that to happen, but very super bullish. And that's interesting because let's see what happens with regards to the euro economy. But again, I stand by my assessment that I think you're going to find the G6 economy is certainly, I can't account for Russia, but I think the G6 economy is, I mean, Russia's in a lot of trouble. But I think that if we look at most of the others, they're probably going to be holding their interest rates as long as they can. And trying to, and everything else potentially looking better. So in the UK, for example, we've not had a lot of growth. The UK has actually been one of the underperformers since the global financial crisis. So it really does need to kind of decide what it wants to do with it. The ASX in Australia, also look at that. Just an amazing week, bullish right up to the top. Looks very, very good. It's technically still in a downtrend here on that monthly, but it's doing very good. I mean, there's no real, look at this beautiful breakout, pullback, and retest. You've got these beautiful, in this one, a bullish engulfing candle closing out right up near the highs. Very bullish signals, guys. Nikkei having a bit of a battle at this level, and I get that because it battled through here and then had a breakout and then needed to come back down. So it had a bit of that, it had a nice little double bottom here, where if this double bottom holds, then it should hold at this level here. So this should produce a higher low, which means again next week potentially off this level, and then it should take another run at that level. But it's clearly battling with that level. So you know what, so be it. All right, let's move on to individual equities. Apple having a good week, back up at these highs. I think it's worth our while to just add that in. Okay, there you go. That's kind of where we're at. Yeah, look at that. Okay, there we go. That's our battle line there, 195.54, but it's performing well. Well, let's see how it copes at that level. It doesn't look that overextended. It had a beautiful correction here. It looks good. So that looks really nice. We've got Amazon doing a bit of a correction. So that's what I'm talking about, guys. That's all I'm talking about. Come back down to 140, test that. That'll be a no-brainer. Doesn't have to, because it's not as overextended as the rest, but that would work quite well. AT&T doing okay. Doing okay. They're almost above that 50-period moving average. I mean, they are above it, but it depends on which platform you look at because it calculates it differently. It's not supposed to, but it does. So it looks like it's kind of free and clear of that, which means it should have room to keep going a little bit higher. We've got ARC. ARC is finally at the top of the range. So this is a significant moment for this. Imagine if you've been a fan of theirs and basically since 2021, January 21, which we've got January 24 in a month's time. So 3 years of solid kind of really not really seeing much value. But this is a significant moment. If I put this into that range and we get out of that range, then they can finally start to breathe a little bit. There'll be, I believe, some very strong moves up to 70. So there are some areas that might be undervalued where there's some potential investment opportunities people will be following. ASML looking good, closing right up, so that looks okay. It's had a bit of a consolidation there. Glencore looking good, bullish engulfing candle to the top of the range, easy stuff. Tesco's also continues to push and drip higher. You're looking good, man. Okay, American Express, battling a little bit with this level, but I'm not concerned. I mean, a move down or up, at some point we're going to break through this, and it's just stuck between these two levels right now. So that's the way I'd put it. Berkshire Hathaway, this is very nice. This is great. This is all I want to see happen. We see a beautiful retracement into the moving averages. This is a primo spot for Berkshire to take another run. From there, its next spot is going to be here. That's going to be its next spot. There we go. I just want to move it up there. That's its next spot there. That's what it's going to have to kind of deal with. 370. You know, a quick question to the audience. I want your input here, please. I could either use just single blue lines for all my horizontal levels, just one color and do that. Or what I used to do, which was use green for monthly, red for weekly, and blue for daily. I like that because immediately I can tell if I'm dealing with a monthly level just by color or weekly. My question to you is, do you care? I'll do a poll on the community section as well. Do you care, or do you have any yes, no, I don't like it, I don't care? You know, I'd love some feedback on that, because I'm always stuck, and I always try to keep what I'm doing interesting and stimulating also by changing those colors. And the last couple of weeks I've been thinking, do I need to go back to colored time frame lines, or does it not matter? Coca-Cola is good. It's slowing down a little bit. So it's running into the 50-period moving average and this horizontal level. For the most part, it looks okay. I'm not worried about it. I don't think it's too hot. Running hot meaning overextended or anything like that, but you know, it slows down a bit. It could find that it starts to come down a little bit, but overall, in principle, I'm still bullish on that. Okay, so BP here trying to hold its support. Look at the wicks coming in. It's desperately trying to stay there, and I spoke about the idea here we might potentially get it building up to a breakout. We'll see if that's the case. Right now, it's not giving much away. ExxonMobil starting right down near the bottom of the range, so I'm going to drop that down. That's actually the bottom of the range. So let's see what happens here if it breaks through that level and is going to do a deeper correction. But they're not highly correlated. I mean, sorry, they are. They're just not extremely correlated. But I would say that obviously companies such as BP and ExxonMobil are at least 70% correlated, if not 80 or 90, to crude oil, or just to oil in general, to energy, right? So if energy stuff is dropping, they'll be dropping. General Motors, very nice. Look at it back up into this range. Pretty good. Really nice. No problems there. JP Morgan, excuse me. So again, here we've got that high. And actually what I should do at this time, for example, would be you do a copy, move it to there, and then I would just change the color. There used to be a way on the platform where I could, and then you know it's a weekly high there. Yeah, okay, we'll see if we get past that. A little bit of a pullback here would also be a good thing, but in principle still looks good. Look, remember I said earlier that when a market hits a previous all-time high, there's often sellers at that. That's why as we approach these levels, I'm always like, okay, well, let's see how we handle it, because I know there are going to be some sellers, they're short sellers, they're there. There are lots of people who've learned how to make a living doing certain things repeatedly in the markets. And one of those types of traders or investors are short sellers. And their favorite thing is to short sell when a market is overextended and it's coming up and hitting an previous all-time high or something like that for the second time. Adidas looks fine. This could hint at a potential retest of this and a continuation. Doesn't look terrible. Meta, beautiful. Guys, this is beautiful. This to me, my budget is done. I've been loading up, but this is a buy signal traditionally. So again, I should be clear here. This is not financial advice. For me, this is a break and a retest producing a bullish candle at a previous level of resistance. Traditionally, that is a well-known type of setup on a weekly candle. And look, we haven't really even got up to all-time highs here. So that's a possibility there. So that's interesting. I'm going to take a quick snapshot of that as a note on the side. Just going to do that. Okay, Morgan Stanley also looking good. Continues to, this is an important level, a line in the sand. But look at that, beautiful, nice behavior, looks good. Should continue to push up off the bottom of here, not overextended. Yes, this is a downtrend, lower highs, lower lows. So for the purposes of demonstrating the value of kind of using trend lines correctly is to mark them sort of like that. It's a very gentle one, but we can see when we're starting to push that. And if you want to add a secondary one, a sub level, you get something like this, and we're already starting to breach it. So we're starting to breach this little sub. You get fractals, right? Patterns within patterns, a downtrend within a downtrend within a downtrend. This is a downtrend within a larger downtrend, and we're starting to breach that level there. Okay, so that all looks good. I like that. Right, NVIDIA, not bad. That's a buy signal. Okay, so I like that. Netflix coming back down. So again, a nice little bullish candle here would be, for me, a nice little setup. Keep an eye on that. It's interesting. You do need to kind of, again, you want to kind of tag these because that is a key level there. But a bullish setup here could potentially see it take another run at that. PayPal. All right, guys, the little engine that could. Yeah, very interesting to see if that can break through and push a little bit higher. And see if we can get through that. That's important. It needs to get back over that line. I think that's very important. Spotify. Just a quick mention, guys. I try to read as many books as I can. And this is a phenomenal one. Michael Lewis wrote The Big Short, which got me into movies, done a whole lot of incredible books. Boomerang, it's just a huge number of them. And he wrote this one, Michael Lewis, he wrote this one called Going Infinite, which is the rise and fall of Sam Bankman-Fried, who created FTX, which is obviously now, you know, he's kind of going to prison. But it's a really, really interesting book. Tells you a lot about what was going on behind the scenes at cryptos. The guy, so far as where I'm in the book, and I'm almost done, I'm like 80% of the way through it. The guy's not a crook or anything per se. He might have disregarded the responsibilities, but he was a very, very smart kid. Maybe a little bit on the spectrum, a little bit kind of like a little bit unemotional. There's a name for it, and I've just blanked on what that is. The point is, this book is really interesting. It's definitely, and Michael Lewis writes great books. I recommend get the audiobook or read it. Tells you a lot about kind of the mechanics behind cryptos as it was developing all over the world. Tells you kind of who the major players are and how they kind of made some of their money in the early days that some of us couldn't necessarily couldn't have done it because of the differences in price fluctuations in different exchanges around the world and all kinds of crazy stuff. If you're wondering where some of these billionaires came from, it wasn't just mining the stuff and it wasn't just buying it and holding it. They had other kind of legitimate kind of exploitative tactics. So because the market is new, there can be ways in which you can exploit it because it's kind of like the Wild West. Very cool book. I thought that was worthwhile reading to give you a real bit of knowledge that I've just read. I was finding it fascinating. So recommended reading, guys. I really think very good idea. Will really expand your knowledge of the development of crypto up until now. I think that's a really good way of putting it. It will potentially even change your opinion for the better or for the worse on cryptos. Okay, anyway, wanted to show you that. Okay, Spotify. Bit of a pullback here. You can see there's a little bit of a reaction at that round number 900. 200 looks good, bit of a gap up. This could really benefit from a bit of a correction. Possibly want to do that, so we'll see if that's going to be the case, but otherwise looks good. This, again, solid, beautiful break, beautiful sort of double bottom here, and then a nice little bullish engulfing candle there, and a bit of a break and a retest, a continuation candle here, looks good. So my expectation for now, aside from any other natural retracements, it's just going to keep going. FedEx, also look at that. That's a clean, solid break so far. Break, which to me means that next week there could be a retest and a continuation to the upside. Looks good. Really like that. Tesla continuing to push up a little bit higher. Remember, a rising tide lifts all boats. So you can see a little bit of kind of it's battling a little bit here, but for the most part this week looks like a relatively decent week. So again, I still think there's a little bit more. It's going to get a bit of a push to the upside. Vanguard looking fine. It's also sitting at a key level here, but for the most part seems to be holding. It's a little bit overextended, but not crazy. It's had a bit of a consolidation here, so I think it's got the room to keep going. Walt Disney, beautiful. There we go. And another buy setup on that. Also looks good. Also getting above that 50-period moving average on the weekly is a good sign as well. All right, so we're almost done, guys. Stay with me. Okay, so we've had a retracement on here with regards to the 10-year T-note. We're back into this level. We're not free and clear of this at all just yet. We can see a little bit of bullish divergence coming in. We're not there yet. I need to see a real break above these highs here. So this week, we'll see if it's going to resume that downtrend or if it's going to, whatever it's going to do. I'm not seeing much that I'm really excited about. Whereas I'm a little bit more optimistic with Eurobond. I want to see this start to push up a little bit higher, but this whole area is just a mess. This is just a mess. So, and then cryptos. Let's wrap up on cryptos. Great week for Bitcoin. So I'm not often completely wrong about stuff with Bitcoin. I was waiting for it to do that correction, but it's just continuing to push higher. So that's going to be the case. And then last week, I think I spoke about, well, if you get a pullback, then, but this would potentially be that pullback here. I still think we need to potentially get that retracement. I stand by it, but I don't want to, I mean, eventually, obviously, we're going to get a retracement. So I don't want to be that person who says, well, I told you. I don't want to be that guy. I'm not seeing much signs of it yet. It looks like it's going back into bubble mode. In other words, we're getting a new crypto bubble at this time. The symptoms of a bubble is the angle of momentum is just straight up, and you don't get retracements when you really should. And that's how you just get parabolic, parabolic is another way of describing a bubble. So we're going parabolic here. So any kind of a correction now would be really well received. For the moment, it looks really nice and bullish. It just makes it tricky to get into it because it's not taking any breathers. Ethereum, as I said, it looks a lot more healthy. Nice consolidation here, and then a breakout. So it's had its breather, and that's a nice breakout. And now it's not that overextended in comparison. So that looks fine. I would say this though. Bitcoin is doing well right now compared to Ethereum. There's been periods over the last couple of years where I was like, Bitcoin looks a bit wobbly and Ethereum looks like it's stepping over the line. Now, I would say Bitcoin looks like it's back in and it's the leader at this point in time. Heading back up to these levels, again, consolidation here and a breakout. It's had a rest. It looks okay. We'll see. we might find that we get a correction over Christmas and it does it. Look at this one, Cardano, boom, just gone, on fire. But definitely overextended. Again, we need a bit of a, we need even something like this, I guess, would be another way of doing it, okay? Binance will probably follow suit at some point. Again, I learned a lot more about Binance from that book. So recommended, very interesting as well to see that. So it's probably following suit in terms of that, potentially going to break out of this. We'll see if we get a bit of a breakout on that. It's not guaranteed, but it's, if the others are doing their high, they're going to do that. And then it's got a bit of a level over here. So we'll keep an eye on that. So I'm going to wrap up with that. I will be at my desk. I'm going to not really be working between Christmas and New Year's, because nobody should be doing that. That should just be a rule. And the markets aren't going to be doing much. I would kind of observe and learn and study and back at your desk and get yourself excited about what's going to happen in next year. There's some potential great opportunities. And otherwise, I wish you the very best this coming week. There should be some good opportunities everywhere. Remember to plan your trade and trade your plan, manage your risk, try to stay as unemotional as you can. Don't overtrade. You don't need to be doing it 8 hours a day. It's ridiculous. And that's it. I look forward to seeing you in a week from now. All right, thanks very much. I will see if I can do some live market scans next week in the evenings. Okay, I've been very busy the last couple of weeks, haven't really had a chance to do it. But that's it for me. Thank you guys. Have a good one.